update for this Wednesday, the 30th of March, 2022, 8:35 a.m. Central Time. As you can see, the markets are down in the stock indices. They're well off the lows that they made, but they're still down. The metal market's getting a little bit of a bounce, nice needed one after yesterday's washout in the gold. Very terrible action actually yesterday in the gold market. Dollar down pretty hard today, right near the lows of the day, and most of the currencies are up against it. What wild range you've already had in the yen, 81.32 to 82.58. I pointed out yesterday to my subscribers that this market was losing its embedded reading and ready to make a run to the 18-day average. If you take that embedded, that enhanced slow stochastic course I have in my regular charting course, you learn these little techniques, and they really help to keep you out of harm's way. Nothing keeps you completely out of it, but these are certainly some interesting techniques. Up in most of the energies, as you can see today. And why? Because Russia says one thing and does another. They are not stopping their assaults. They're redeploying people. They're still shelling villages around Kiev. Nothing's changing. If you believe that, come on. They got a bridge to sell you in Brooklyn, right? It's just not going to work that way. And I know the world wants it to. But Putin has a plan. He's been set back but not stopped. And there's not enough pain in his mind that he's caused Ukraine to get whatever at the end of the game is his end result. I still think it's going to be the corridor from Mariupol to Crimea, cutting the country in some manner. And he's going to have to create enough pain for Ukraine to accept that. And then the other parts of neutrality, no nuclear weapons, things of that nature. This has got a ways to go. The anguish is not over. But as we look at the markets, let's go to the day's data. We got the MBA mortgage numbers. I thought they'd be poor. They didn't come in as terrible as they could have, but the index, as you can see, is off nearly 7%. The purchase index was actually up 0.6, but here's where you get annihilated, the refi. You're looking at these rates all the way up here. People aren't doing it. Down 15% almost for the week. ADP numbers, the private payrolls up 5,000 over the estimate of 450,000. And keep in the back of your mind, I think the last number was 475. When we come to the fourth quarter final GDP, very much in line with the expectation of 7% at 6.9. But where the little bit of weakness is now starting to show up is personal consumption, down 0.6 from the preliminary, and final sales down, well, that's 0.5, but that's 1/4 point from what they expected. So those are the weak areas, and probably getting a little bit weaker as inflation will take its bite on what the economy is doing. It's time to switch over. I had the May Brent. It's not a move over into the June. The May's coming off the board right now. I know it sounds crazy. Here we are in the month of March, and the May goes off the board. I don't get it, but that's how they set up the contract. The bids and the grains, let me tell you why that is, because the market realizes Russia is a liar. And nothing is close to what the market thought yesterday. The market is looking that all of a sudden Russia's had enough and they're going to make a peace deal. It isn't going to happen that way. So give it time. The market will give you opportunities because of that. But here's something that I think is taking place. I think the volatility is starting to shrink in some of the markets, narrowing in. Watch Bollinger Bands to get an edge on that. If you want to learn more about Bollinger Bands in the way that I teach them, it's called the Enhanced Bollinger Band course. Simply take your cursor, put it up here. There'll be an icon. Click on it. It'll take you right to all that information. I'm Ira Epstein. Have a great day. I will see you all at the end of the day with the market wrap-ups.